Alright. Just getting set up over here. Give me 1 second. My notebook. Alright, let's get hunting. How's everyone's weekend? How we starting off today? I'm about to get into it, take a deep dive. Let's see what we want to do first. I'm trying something new today too. So you guys don't have to keep watching me just look at the spreadsheet the entire time. Let's just do this hunt together. I'll do the spreadsheet on my computer. I'll pull it over at the end and show you guys the numbers you need to see. Alright, CCX. Let's try that one. Or first, sorry, let's look at Reddit. Let's see if anything just got announced today. So always try to prioritize the new DAs, the ones that just got announced today. Those are going to be the best ones to jump on, find out about them as they're happening before anyone else does, because they will. And those ones can move real quick. If you can catch them before they start moving and you find a good company, those can go from 10 to 20, in an instant. So, let's see. Got an Ethernet cable plugged in today too, so shouldn't be any connection issues, but let me know if there are. If you haven't already, please smash that like button, smash that subscribe button, and ring the little bell next to it so you get notified every time we drop new videos, every time we go live. We're making money up in here, which is every single day. The stock market's open, folks. We don't want any any of this. We want the juicy stuff. Where's the juice at? No, I'm done. Yeah. Come on. All right, we got these. We got some DAs over here. All right, TBA. What's TBA merging with? TBA is going to merge with Iron Source. Good morning, JC. How are you? How was your weekend? Let's see, these are the new DAs, so we're going to do these ones first. See if they haven't moved yet and we can catch them. And if we can get a good deal on them, if we think they're good companies. We're not just going to chase Spacs for the sake of chasing Spacs. We got to find the good companies so that our money's going to, it's going to grow and it ain't going backwards. If they didn't get on the train with us now, they're going to have to catch us at the next stop. That's what we're looking for. We don't want the quick gainers and then we dip. I'm not that kind of investor. And LAC, they're going to do OTT media business, the third largest broadband. Okay, interesting. MNC Play. And Visions is a double merger, it looks like. Very interesting. Revenue projections look pretty moderate. Okay, let's dive in. Let's go start with TAB stock price. We're going to have to open up another tab. We got to do Iron Source Investor Presentation. It's just got announced today, so this should be fresh. I'm going to try something new today, folks. I already announced in the very beginning. I'm going to go ahead and I'm going to do the spreadsheet on my main monitor. Oh, good morning, Les. Great to see you in here, sir. I'm going to do the spreadsheet on my main monitor so you guys can kind of follow along as I'm, gathering this all together. And then I'll bring over the spreadsheet at the very end as well to kind of show you the numbers we're looking at, give you an overview of it. But this way it doesn't look like I'm just staring intently at y'all, because I would get weirded out if I was watching. So, I love my face, don't get me wrong, but I don't love it that much. Y'all let me know. You guys making money today? Give me some ones in the chat if we're making some money on this beautiful Monday morning. Give me some twos in the chat if the market hasn't gone either way for you yet, and we're hoping to send that puppy north. Or give me a 3 in the chat if we have started red and we really got to get some good feng shui up into his house, and we can send that puppy north for you by the end of the day. Let's end that day green. How about that? If that sounds fair to y'all, throw those numbers in the chat. Let me know how we're doing. All right. TSMPD keeping you in the green. Congratulations, Les. I love to hear it. Love to hear it. Oh, we got Spacs. Woo! We got JC making some money up in here. I'll give you guys a 1 in the chat as well. Your boy Lowedaddy is making some cheddar today. He is proud to admit it. Alright, so chugging these numbers. Then y'all let me know. I've got the Ethernet cable running, so for any reason it shouldn't. If the stream starts getting laggy again, let me know so I know I gotta figure out another solution because the internet speed numbers looked great this morning, which is good. TBA, who are we merging with? Iron Source. What do they do? Looks like content creation SaaS. What's going on, Hanks? How you doing? Sitting even on the day, so we got 2 up in the chat. All right, guys, we got to get some good feng shui in the chat so that we can send this puppy north for Hanks by the end of the day. He could be one of the ones by the end of the stream. That's the name of the game. Just get everyone in here to be ones somehow, some way. Only way I know how. Great feng shui. Interesting. ROI, positive campaigns. Not clear what they do. For app developers, okay. Okay, I think I got a clear understanding now. We got app development, content creation, software as a service. Alright. Alright. They're doing revenue. We need to see that. We don't care about a bit. I'll explain again why later when we get there. Music is rough right now. Is it too loud, or is it just kind of spotty, or what are we getting from that, JC? Give me some insight so I can fix it, hopefully. Or you just don't like the music. Alright, we need to get the transaction overview. Sorry, my brain is on cruise control right now. Came into the office this morning. Listen to this, guys. Pretty crazy shit. Came into the office this morning. A lead web developer just got back. He was gone on vacation for the past week or so leading up to today. Just got in, same time I did, and his office is locked. And he was like, why is my office locked? I'm like, I've got no idea why your office is locked, dude. I got some things I got to try out. I'll be over here. And so I was, and he finally gets into his office, and he's like, what the hell happened here? I'm like, I've got no idea. This is TBA trouble. Great to see you, my friend. How you doing today? Give me a 1 if you're making some money. Give me a 2 if you're neither red nor green today. We need to send some puppy north for you. Give me a 3 in the chat for me, trouble. If you are in the red, it's nothing to be ashamed of. We just need to know how much feng shui we got to generate up in here so we can send you into the green by the end of the stream. And so he gets in there. He's like, "What the hell happened here?" I'm like, "I have no idea, dude." So I go and look, and he's got like his cushions are on the ground. His stuff's been rummaged through. There's like a top to a wine bottle in there. There's pistachio shells laying everywhere. So what ended up happening, I guess, is like a homeless person broke into only his office over the weekend. They broke in his office and they had themselves a little party with just wine, pistachios, and they didn't take anything. They could have taken his entire setup. Like he's got multiple monitors, he's got a very nice computer. He has checks in his desk. They didn't take anything, which is nice, but they made an absolute mess. So we just spent the first 30 minutes here having to file a police report, which set back on a Monday. So not how you want to, or how you expect waking up Monday morning that you're going to be spending your day. But that's how we started our day. You guys have any interesting starts to your Monday? Those are revenue. Pretty crazy, right, JC? Oh man, life has a funny way of throwing a bunch of shit at you. That's what we're finding out right now. Savvy, we gotta see what we think of that. I need this transaction summary. Like I said, my brain's kind of spotty right now. Trying to process that crazy morning, but we'll get there. All right, I got the transaction overview over here. So we've got our EV. We're gonna do EV enterprise value 10,334. Got it. All right, so they're doing it at $10.3 billion. That's pretty high enterprise value. Let's see if we agree with it. Let's look at our. Thank you, Savvy. Appreciate you as always, my friend. How was your weekend? If you guys haven't already, please, 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 smash that like button, smash that subscribe button, and ring the little bell next to it so you get notified every time we drop a new video, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks. All right, back into it. See, we only have 4 likes in here. We got 7 viewers. Please, may we have some likes? Equity value, we're looking at $11 billion. That's what you see right here. This is after the transaction goes through, so you can see, what's going on. My weekend was good. It was some longtime childhood friends of mine who grew up across the street, identical twins. It was their 25th birthday, so I was downtown celebrating that with them. We had a good time, good friends, good people, good vibes. That's what I'm all about. It doesn't matter what you're doing as long as you surround yourself with good people. You can sit in their room doing nothing for, a few weeks. If you got the right people around you, you're going to have a great time. So spend your life surrounding yourself with great people. You'll have no regrets by the end of it. Alright, let me get this number first, actually. I want to get what percent we're going to own. Okay. So we're looking over here. What percent of the pie are we getting? Existing shareholders are getting this. We're going to get 9% plus 2% for our founders and sponsors. Let's chug that into here. And then, all right, 1083 is the price we're seeing today. That gives us right now, as we're plugging this in, it closed at 1082, so it still hasn't moved on Friday. And market cap, they don't give us the market cap. Let's go to finance. Yahoo Finance. Exactly, Les. Exactly. Thank you, Savvy. I appreciate that as always, my friend. If y'all have any friends that you think would have a great time up in here, invite them in here. We'll welcome them with open arms. I appreciate you as always, Savvy. You are the man. I gotta finish watching that UK video you sent me too. I had no idea that the UK dropped some nukes on the US in the 60s. I think everyone was preoccupied with everything else to realize. Now we're gonna wait. 1084. That's a pretty high market cap, I will warn you there. Yahoo Finance. So I'm trying to do, that's my 2021, right? New Year's resolution was to transition from saying finance, like all the common folk, and transition into saying finance, like all the successful finance people. Oh, I don't want to go back to Yahoo Finance, but I will. Alright, we just need to get the first number we see, and we gotta see the market cap associated. Alright, 1080, 1.376. Okay. And that was at 1080, and it closed at 1082 on Friday. Alright, now let's get the hell out of here before it slows down my computer. TBA are third in platforms list behind Google and Facebook. Really? I did not know that. Okay, let's get back over here. This gives us a, even though the price doesn't move, remember we're always looking for good deals. Not necessarily great companies, people. We're looking for great companies, but we're not going to buy them for a crazy price. We're not going to go buy Tesla for 700 times their earnings, right? We're not going to go buy Tesla for 40 times their book value per share. We're looking for discounted purchases here so that we have room for growth. And we're getting to own great companies at a great price. You're not going to go out and buy a toaster at $5,000 a pop just because everyone seems to love toasters nowadays. It makes no sense, because eventually the toaster, the demand's going to settle down, supply is going to remain constant, and that price should come back to reality, right? So that's how I think of it. We got to go find great companies at a great price so that we can get great returns on them. So what I'm seeing so far, it does not look like this is going to fit that bill, but let's see what kind of revenue we're looking at here. All right. What are we seeing? Here we go. So the Dow, SPY, and NASDAQ are all up. You think most of your portfolio would be as well, I would assume. What are you holding in your portfolio? What's down today? And what's up for you? Alright, so we got our 2020 actuals. Let's see if we can find any 2023 or beyond projections. Comparable companies. Okay, so we do have competitors there. Yeah, that's what Kathy says. I don't doubt it, but you know, Kathy was smarter than I. That's for damn sure. So don't think I'm ever trying to step on Kathy's toes. Could it be? Sure. Can I get in at a better price? Probably. The market crashes. You guys saw what that one little pullback looked, and we're kind of. I'm not going to spend time trying to time the market, right? I'm not that smart, but we saw what happened in that little like 2-3 week pullback scare. What happened to Tesla's price? Just as quickly as it climbed all the way up there, it fell even quicker when people started to panic. It's just human nature. And how they say psychologically you should start to look for the end of a cycle, an economic cycle, is you're gonna climb, pull back, you continue climbing. People start thinking this is never gonna end. This is all these prices that are insanely priced. Or all these companies that are insanely priced, we're going to buy in there. This fund is never going to end. They start making these projections that are just parabolic projections. If it does go parabolic, that's typically the signal the end is coming. I thought we already went through that. It appears we did not. I don't think the market's going to crash in the next week or anything, but I'm starting to see some signs out there that are starting to worry me a little bit more than I was 2 weeks ago. But again, we're not here to time the market. We're finding great companies, so it doesn't matter what the hell the market does. If we leave our money in there for the next 5 years, it's going to be worth more than we paid for it. That's what these companies do throughout history. These companies make more in revenue and profit and in income today than they did 10 years ago, than they did 20 years ago, 50 years ago, and so on. Every 10 years, money is going to continue. They're going to be making more money than they were 10 years ago if you find good companies, and they're going to stick around. That's how it works. Alright, so this is our revenue. Let's look for our growth. I want to find... Well, we don't have any projections beyond 2021 and 2022, unfortunately. Oh, I want to see this. Global tech companies, Bill.com, Big Commerce, yada yada yada. Interesting. Alright, let's plug and chug some numbers in here. So our 2020s, we did this for our actual $332 million in 2020. I'll explain why we don't look for EBITDA again if you guys are new here, or girls. Or why we don't look at EBITDA too seriously. So for 2021 and 2022. And then let's see what our compound annual growth rate is going to be. We started at 332, 455, I'm sorry, 622 is what we're going to grow to, and we're going to go from 2019, or that's 2020, we're going to do that in 2 years. So our compound annual growth rate is going to come out to pretty aggressive, I'm assuming. Not that aggressive at all, honestly. That's pretty moderate compared to a lot of them. 36.88%. This is from 2020 through 2022. Let's see. They consider themselves undervalued compared to competitors. They wouldn't class themselves as overpriced, would they? Exactly. Yeah. None of these companies are going to come out and say we're overpriced. They're going to say we want more money. We're worth more. I say the same thing too for my services. Like, I'm doing too much damn work over here to get paid, or even what I used to get paid. I want more money. You know, you can start to realize the value of your time, and when you have enough people demanding your time, you can start to charge more money. That's what, you know, Tesla's doing essentially. They have their company, their shares are worth this much money. They were comfortable with it. Now you have enough people who are demanding shares for their company that they're like, we think we're worth more than you even see today. You guys are getting a discount on us. These people are all human. You don't have robots running this company, even if Elon tries to make us believe he is. Elon's actually the one person I've ever seen come out and say that he thinks his company is overvalued. If you guys remember that. All right, we're looking for total attainable market right now, or total addressable market, sorry. Where is our TAN? Should be up here near the top if I had to assume. The booming game category is being fueled by innovative tech platforms. Isn't Unity? Unity is public. Never mind. They're under you. I think they're ticker U, if I'm not mistaken. Where's our TAN? Activision. Whoa. That's a big one. $2.3 billion monthly active users. That's actually fucking absurd. This is a good company. Can we get it for the right price? That's the question, right? What's it worth today? What's it going to be worth 5 years from now, 10 years from now, etc.? That's why it's important we find our total addressable market. It can help us make an educated decision, add to our confidence levels. Got you. Thank you, Trouble. Epic Games. Does Epic Games make Fortnite? Who makes... What does Epic Games make that I know? I don't know why I'm drawing a blank right now. Hey Scott, how are you, sir? It's working a little bit. Got you. Thank you, Trouble. Scott, before you go to the farm, stay a while. Let us know how you're doing today. You making some money today? We in the ones, or we in the twos, or we in the threes? What category are we in? 1 equals we're in the green. 2 is it hasn't gone either way yet. We gotta send this puppy north for you. And 3 is we're in the red right now. So we gotta really get this feng shui generated in here. Send the puppy way north for you. And if you haven't already, please, please, please smash that like button, guys. Smash, smash, so smash that subscribe button. And ring the little bell next to it so that you get notified every time we drop a new video, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks. I'm not seeing a TAM. That is concerning. There we go. Last slide. Nice. So our core TM today is $17 billion. Expansion, we can expand into 10 billion, 30 billion, 41 billion is what they think by 2025. Ugh. Yikes. I don't know what we should put. I'm gonna do... We're thinking about growth, so let's say that this is right, 40 billion. And then let's go put in the notes really quick that about 40 billion. 40 billion, 2025. Current TAM is 17 billion. Okay. Get this in here as well while we're over here. Oh, big ol' number one. Love to hear it, Scott. Love to hear it, my friend. Let me see. Okay, now let's go to our competitors, our comparables as they call it. Not sure if they are calling these their competitors. HubSpot is definitely not a competitor of them. I use HubSpot. I love HubSpot. Let's see, where are the public comparables at? We just had a whole list. We can do that. Okay. Shit, what the hell is this one? Digital Turbine. Got it. Yeah, we could break it down like that. Let's do that. Oh, I like that actually. Core peers and enablement peers. Yeah, I'll break it down that way. Core peers. Remember, folks, as soon as I'm done putting these plugging and chugging over here, I'm going to go ahead and bring the spreadsheet over here so you guys can kind of get an overview of what we just put in here, rather than I'm just staring at y'all while I put numbers into a spreadsheet. The core peers. God, what was that company called? Digital Turbine? Yeah. Digital Turbine, Unity, The Trade Desk. We've got enablement peers. We've got Bill.com. ADIEN. Shopify. I would say Shopify is very comparable. E-commerce and Twilio? Yeah. Cool. Alright, let's see if we got any existing noteworthy clients or partners, which I believe we do. This is nothing new. That is literally how any business has grown, right? You grow your user base, you grow your customers. Then that drives you more revenue. You analyze what's working, what's not working, what we can do better, what improvements we can make. You're going to reinvest in those improvements and into marketing and sales to generate more users and customers and so on and so on. That's just how business growth happens. That's what I do. So nothing, I think it's kind of just like a pointless slide to have in there, but whatever. So I'm not seeing any partners. We can take their existing customers though. Okay, let's do this. App developers. Aristocrat. Activision. Gameloft. Lyric. SYBO. Okay. Then our telecom operators. Customers are going to equal Orange, Boost Mobile, Samsung, Vodafone. Then also we've got this up here, this little tidbit. Other notes. So what's going on, Mr. Ainsworth? Thank you for stopping in. Appreciate that as always, my friend. We are doing well. How are you doing today? You making some money? Let me know if you're making money before you go. Gotta know how my friends are doing. Other notes. Used by 90%. Top 20 most downloaded games. See slides 9 and 10 in investor presentation for more info. Cool. Alright, I think we're just about done over here. Let's see, anything else noteworthy on here? Sam G, how are you, sir? Or Madame, I don't know. Sam could go either way. Great to see you in here. Appreciate the regards. If you haven't already, please, 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 everyone, smash that like button, smash that subscribe button, and ring the little bell so that you get notified every time we drop new videos, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks. All right, back to the hunt. Yeah, why am I drawing a blank right now? Y'all help me out. Who's that cartoon who's always hunting Bugs Bunny? Yeah, I've seen pretty much everything I need to. Let me bring over this spreadsheet. Here's our risk factors. It's a good company, guys. Don't get me wrong. Let's make it a well-educated decision. HIMS. What's that one? Hims and hers. Hmm. Elmer Fudd, that's what I'm thinking of. Thank you, Mr. Ainsworth. Appreciate you, Ryan. Yeah, I gotta get like an Elmer Fudd get up if I'm gonna go on Spac hunts. Be taken seriously. Yosemite Sam. Thinking. Hims and hers. Do they have any recent any earnings? Let me just pull this up. Let me just take a quick look. If they had a recent earnings, I can do that one really quick next for you because I haven't done a public company in a while. Got to sharpen my sword a little bit. Looks like the most recent earnings was their quarterly. Looks like something's coming up right now, maybe why their stock is falling today. If they're supposed to have bad earnings, let's see if they have any metrics published in here. He wasn't hunting rabbits. Revenue looks like it's about the same as where it was the quarter before. It's been improving all year. Let's look at our net loss. Looks like our profit margin should be rising. Let's go in a quick glance. We need to see their next earnings. Let's see how their assets look now compared to 2019. Total assets have gone up pretty substantially. Our current assets have gone up pretty substantially as well. You can see this is $69 million. We're looking at $113 million, 118, almost 119 million for total versus 72 million the year before. Liabilities, let's see what's happening here. Liabilities have gone down. So our shareholder equity, because our assets have gone up, our liabilities have gone down. Well, we know a balance sheet's going to be assets are equal to liabilities plus total shareholder equity. So when your liabilities go down and your assets have gone up, well, that makes more room for our shareholder equity, which makes our shares worth more money on paper, which is one of the indicators we're looking for. Let's see, our liquidity looks more than okay. Our liquidity, I can tell, is above the 2.0. The current ratio, you can see our shareholder equity down here. Well, that doesn't make much sense. I don't know what the hell mezzanine equity is. Looks like they have a bunch of convertible notes out there, which are diluting our shares, and this has to get taken out of there. Our totals, our book value per share is going to be equal to our total shareholder equity minus preferred shareholder equity, and then something like this, convertible notes have to get taken out as well. These have to get paid to their owners eventually, which is why even though we're at such a high surplus, our assets outweigh our liabilities by so much. Oh, Angela, great to see you in here. Please smash that like button and let me know if you're making some money today before you dart. So yeah, these convertible notes have to get paid, and even though you can see our assets far outweigh our liabilities, we're looking at 100 and almost 19 million versus 15 million in liabilities, which would usually indicate that our total shareholder equity is going to be great. But these convertible notes are killing us. We got 250 million in convertible notes that we need to pay back, which is also what's driving our assets up. But you can see our total shareholder equity is not an equity, it's a deficit right now. So we've actually gone 7 million in the wrong direction since the same time last year. not a great look for us. That might be what's driving us down as well. So there's something to keep an eye on for you. I'm not, too familiar with hims and hers. Besides for what I can see right now, we'll have to wait for their actual 10Q or their 10K to get released, which I would expect to happen any week now, if not this week. Let me bring over the spreadsheet for y'all so you can take a look at the numbers we just crunched in there for, oh man, let's get this full screen. Okay. Straight cash, homie. How you paying for this? Straight cash, homie. Alright, so this is TBA, this is Iron Source. Again, when we're SPAC hunting, guys, we're not just looking for great companies. I think Iron Source, based on everything I saw, is a great company. At this price, though, is it worth it to us? Let's investigate. Let's make an educated decision together. Price hasn't really moved since the announcement. It's actually gone down from where it closed Friday, even from when we started this. It's down to 1078 last I saw. So this is the enterprise value that they said the company is valued at, $10.3 billion. After the cash infusion, after this merger goes final, they get all these new resources. We're going to be looking at $11 billion for equity value, which is what this number is going to be based off of. So I'm looking for, usually in my mind, it's subjective. You're not going to see this anywhere else. I'm looking for 2 to 3 times what we see the equity value to be. That's healthy for me. Anything beyond, they're starting to get some speculative growth priced in there as well. So, yeah, that's what we're looking at. This is after the merger because of our ownership. It's going to be valued at $12.5 billion. We're seeing that they're doing $332 million in 2020. It's great. They have existing revenue. If the market were to crash tomorrow, they're probably going to be more than okay. They're projecting that that's going to grow to $622 million by 2022. They didn't give us any projections beyond there, but then what I don't like about this, remember we're always looking for TAM. It's a very important metric in here. Our total addressable market. How big is that pie that we're going to capture a piece of? Because don't be ridiculous and think we're going to capture the entire pie. It's just not going to happen. We got big competitors out there as well. But look at this pie compared to some of our other pies in here. We've got 40 billion here, projected to grow there by 2025. We're at 10 billion today. I'm sorry, not 10 billion, 17 billion today that we know. And we're looking at some of these other pies that we can chase. This one's 318 billion. The one for Open Door, my big holding, right? That one is 1.6 trillion every single year. So if I can capture even 1% of that pie, if I can bet on the person who's going to capture 1% and be alive 5 years from now, I'm going to have, mathematically, $16 billion annually coming in. What my profit margin on that is, we'll let time tell. I think it's going to be very healthy, but, that's a big pie to capture. Here, we're looking at a $40 billion pie. We don't know if we can even capture, 10%, let alone 25% to justify the valuation we're seeing today. I think it's a great company, guys. I don't like it at this price. I'm not going to buy, but y'all always do your due diligence. Never buy a company based off of what one person tells you or 2 people tell you. Do your own due diligence and research and decide, do I like this company? Because I'm wrong sometimes. Believe it or not. How can a 25-year-old be wrong about anything ever? I'm not the guy to tell you, but I am wrong sometimes. And, yeah, I'm not a financial advisor either. I'm an online marketer. So, take everything I say with a grain of salt. I do have 5 years of business ownership and starting companies under my belt, but that's where my acumen comes from. So that's TBA. I don't like it for a buy. I'm not going to buy it. Not at this price. MLAC. Anyone have any other companies that want to look into? This is another one that was just announced today. So I'm going to look at this one real quick. MLAC stock. And this one looks like it's doing a double merger as well. Thank you, Sam G. I appreciate that, my friend. I am not accounting for inflation in these, Angela, and I know that that's not the most tactical way to go about it, but just for the sake of getting this out there as I build up my acumen, I don't want to put anything on the spreadsheet or on my website for y'all to access. that I don't really understand myself. I don't think that's the right thing to do. Um, but if I were to, I mean, Angela is. If anyone's unfamiliar with Angela, I don't know one how you're not familiar with Angela. Angela's one of my favorite person in our Discord and our entire community because she does a shit ton of research on these companies. She understands the chart. She understands how the economy is getting swayed by the market and how stock prices are getting affected by that as well, and what might get hit because of certain things happening. So she's a good person to listen to. Um, but Angela, how should I account for inflation? Enlighten me a little bit. Help me sharpen my sword a little bit more than it was yesterday. Because what we, before Angela gets back in here, inflation is going to play a large factor. And people hear inflation and they don't really know how to, how to take. You're welcome, Angela. Inflation, they get scared because everyone thinks immediately to hyperinflation, which is completely different, right? And you got post World War One Germany, right before World War Two, where they're in hyperinflation. The franc is worth shit. It's not worth anything. Um, Venezuela's going through something similar right now as well. That's what people think superinflation. Inflation is healthy because it's going to, spread more money throughout your economy, obviously, as long as your GDP is growing with that. Yeah, Angela's recommendations always warrant some looking into. Oh, interesting. Okay, let me write this down. Oh. All right, I'm gonna try doing something like that later today, Angela. I might message you on Discord and just ask for some more insight over there, just to make sure I understand everything correctly, because I think that's a great addition to the spreadsheet for sure. I was saying about inflation real quick too is growing at 2 to 3% is a healthy inflation rate. You look at, remember I run this discussion on Clubhouse. If you're not familiar with Clubhouse, it's like an audio chat app that you can chat with anyone around the world about anything. I run a club on there just called Teach Us Something Cool. We have a discussion every single Wednesday night around 9 o'clock. We're starting to push it earlier because we're getting a lot of people engaged there, and it's just going too long. People have work the next day, and we have more to discuss. So a couple weeks ago, we discussed Japan's economy in the 1980s and how it was booming, how they've gone through pretty much 30 years of stagnation since then. It was supposed to be just referred to as the lost decade. Now it's the lost decades because of numerous variables. Mainly, uh, they also their government hasn't been inflating their dollar at all. They're not printing more money, and you need to print more money to stimulate the economy, get it flowing back in there, as long as it's not too much money. Um, and when you account for inflation, when you print more money, and your GDP grows because of it. It's like you're growing a business, you're levering up. Um, Other variables as well. I'm not an economist, so I'm not going to talk too far down that path. As you print more money, you're going to need more money or more of these papers to pay for certain things, right? A house, your food, prices around you are going to start to go up as well. And share price should follow accordingly. And as inflation occurs, you should expect to see the revenue for companies, which is why I'm confident in what I said earlier. You should expect the revenue of your companies to grow as well, right? Your products are going to cost more. Your customers are going to spend more money because they have more money to spend with you. So if you leave your money in the market for 10 years, it should grow. That's why every fund is always compared against the S&P 500. How did they perform compared to the S&P? If you put your money in the S&P, it's going to grow pretty well. There can be more money going into these companies. They're going to have higher revenue. They're going to have higher earnings. They're going to have higher profits. Um, that is that's what inflation does. So we should be expecting to see higher prices for these shares. We should be expecting to see higher prices or higher revenue reported in their annual and in their quarterly earnings. We should expect to see higher profit margin, higher income, higher earnings per share. I'm sorry, not earnings per share, but higher earnings in general, meaning their net income or their net loss than we had in previous years. So that's how I'd take inflation into consideration without having on the spreadsheet. Is just keep that in the back of your mind. But I like the spreadsheet method better because it's not subjective; it's all objective. Numbers do not lie to you. You get the projection if inflation goes up or down should make a big difference. Large it could. Clarify should not make a big difference unless the figures are high. Inflation up, share price should go up overall. This is why some smart money is dumping into real estate or crypto as a hedge. I absolutely agree. People are starting to look for a storage of their wealth too, right? And that's why you're starting to see it for the first time that people are looking at Bitcoin like a storage of wealth. It's going to be, I said it in our, we had a Bitcoin discussion a couple weeks ago, and we had a looming market crash discussion where I said this is going to be really interesting because I've been in Bitcoin and crypto since September of 2016, really as an investor since May of 2017. Bitcoin, Ethereum, and some shit altcoins that aren't worth anything, and I've got rid of all those ones. But Bitcoin, Ethereum, I've been in there, and this is going to be our first true test. We've gone through crypto cycles where they dip down, they consolidate, and they go for another roaring run. We've seen it now going from 2000. Well, when I first invested in Bitcoin, it was at $900, but we've watched that grow to over almost $60,000 now in 4 years, which is crazy. But it hasn't gone through a real market crash. So when the market finally does crash, it'll be interesting to see, do people actually flock to Bitcoin and say this is what's going to keep my money worth what it was today and it's going to grow? Or do people pull their money out of that too? It's going to be the first true test that Bitcoin goes through. My thoughts on the NFTs, I don't know enough about NFTs, to be honest, to talk on them too much, but what I do think is I don't see the true value in there. There's a lot of people, it's all perceived value, right? Right, but what happens to perceived value when the market goes to shit and people need to pay their rent? People need to pay their car bill. They're not out here buying digital art or they're not investing into shitty companies, or they're not investing into shitty O2Cs or companies that are trading for 700 times their earnings. They're taking that money out because they're seeing that as a risk now. Dogecoin's where it's at. I just don't see the perceived value there growing. I think that you're going to have some winners, you're going to have some losers. The NFTs that make it through this cycle, that's why I'm like, I pay attention to altcoins that have made it through that last crypto cycle and still are around today, because other ones, 99% of them went belly up. Their projects, they went belly up. Now look for the ones that have tangible use, that are doing important things, that already have, some momentum there and have survived one crypto cycle. NFTs are a whole new ballgame, right? Non-fungible tokens for anyone who's not familiar. So there's going to be some winners, there's going to be some losers. Ultimately, I'm not trying to get in this cycle because I think people are going to watch their money evaporate, as soon as the cycle's over. I do think that we're going to start to see the ones that are going to be the winners, so find those ones early, have some targets on them, because you're going to be able to get those for pennies on the dollar. Just set some money aside for these NFTs, because if they can survive one cycle and they come back, they're going to be worth more money the next cycle than they were this time around. Don't buy them right now when everyone's talking about them. That's why I'm not going to buy them, because it's too late. When everyone's talking about them, when Bob down the street's talking about them, it's way too fucking late to get in there. That's part of the Spac hunt reason, right? We don't want Bob down the street telling us about some Spac we should have heard about 4 weeks ago, but Reddit didn't talk about it because it had nothing to do with space, and it wasn't an EV, and it wasn't GameStop, and it wasn't, print attendees. We want to catch those companies before Reddit talks about them, because when Reddit starts talking about them, what's going to happen to our share price? It's going to go skyrocketing, right? When Bob on the street's talking about it, our shares are probably looking pretty. So that's my take on NFTs. I'm not going to get in right now. I don't understand them well enough in the first place. I don't even agree with the value in half of them, if 90+% of them. Um, I think they're going to find some winners, try to identify who the winners are going to be, and we'll set some money aside for the sake of buying them for pennies on the dollar when they near their bottom. But we're not buying them up here. I need to see their investor presentation. Let's see, there was another company requested. I missed it. MOGO. Let's take a look. Mortgage loaning, fintech. So they're public. Let's see if they've got some financials we can look at. How about selling them? Yeah, food and shelter is greater than a stupid meme picture, absolutely. Opinion, the real pop in crypto NFT would be when they incorporate porn. Seriously, there is major money there, and if they link together, watch out. Oh, so you're talking about like the the amateur creators on the P Hub nowadays? Talking about creating NFTs for their content. I actually, Angela, I mean, I think that that's a pretty solid point there. Um, I think it's honestly, I mean, I think it's a pretty solid point there. Who owns the original content of things? Because there's so many people who just take everyone's content. And I think that goes for all content creators. Who owns the rights to the original content? I think that porn, there might be an opportunity there because you can't really. It's hard for those companies to monetize it. Like for example, I don't do marketing for any of those companies. Porn, drugs, Viagra, any of that because Google and all these ad platforms they don't want it on there. Um, it's very hard to market for them. It's impossible to advertise for them. You got to find like really shady websites to market for them on. Um, exactly, Savvy, and that's one argument I've heard made for it. I don't know if any of y'all. I mean, Angela knows I love my boy Shamoth. He's got a podcast called All In, where he talks with like his rich friends, and they were discussing NFTs, and they're making jokes about it the other day. But uh, they compared it to art, right? Why do people buy art in the first place? It's typically a storage of wealth, something that they think they're going to sell later on for more money than they paid for it. Today, it's going to hold its value because other people want it. And it's not so much that they own something, like they own a picture, it's that they own the original version of it, or they own, if it's a one of one, great. If it's a one of 10, they own one of 10 of the originals, and it can't be recreated. So what some people did is they found like they bought a Banksy, right? One of one. They took pictures of it, like high quality pictures of it. They cropped it all, and then they made it an NFT, and they made a video of them burning the one of one Banksy. So now it only exists as an NFT. And I think that's brilliant. People think this is valuable. They're going to pay probably more money than you paid for that. They paid like $100,000 for this one of one Banksy, made an NFT, and they sold it for $360,000. So with art, it's the same way. Even though it's you're owning just the original, you're owning bragging rights. That's exactly what art is. When someone's got a Picasso and it's an original Picasso, well, I got an original Picasso at my house. I know that your Bed Bath and Beyond pictures are pretty cool, but I got a Picasso over here, I got a Van Gogh over here, and they're the original versions of them. No, I didn't pay $15 for my painting, Susie. You know, that's the kind of pettiness you get into. So I do think that some of them have the value in that sense, but there's a lot of them that are out there that ain't worth shit. People are buying it, not knowing anything, not knowing better, essentially. Video content and music has the most to gain. NFTs slash blockchain. There will probably be new forms of content creation in the future as well. Absolutely, I agree with that trouble. You can use NFT to open and drive a Tesla. So if a partner forgets keys, you can send NFT to them. Really? But you have to transfer the NFT then to someone else. That seems dangerous. Where are these? Let's look at their Q3 2020. We got 10 viewers in here. We got 11 likes. Y'all are awesome. Thank y'all so much. I appreciate you every single day. These are in Canadian dollars. Do a quick glance at this. Is Mogo. Sam, I'm not sure if you're still in here, but this is Mogo. Canadian dollars. These are in thousands, so I'll add 3 zeros at the end. Total assets are at, well, they're down a lot. They're down about 50 million Canadian dollars. The liabilities have gone down accordingly as well, but not exactly the same. And our shareholder equity has turned into a deficit of $3 million Canadian dollars. So not liking that too much. Revenue, what are we bringing in? This is going to be in Canadian dollars as well. Bringing in 34 million Canadian dollars. This is coming into a net income or a loss of, yeah, not great numbers. I don't know what our market cap over here is. We'll have to go to Yahoo Finance. Let's see, the other companies who pay $6K for a Gucci sweater, and when you pay $120 and get a cyber sweater that is uploaded to IG or Facebook or another platform, and you own the NFT. Yeah, I don't know what owning an NFT in that case does. You know, I think the market cap's over. It's just too high over here. I wouldn't buy this company. I'm not going to do like a full breakdown of it like I typically do. Just because we're Spac hunting right now, I don't want to take too much time on it. But I probably wouldn't buy that company, to be honest. What did I need? I need the Vision Investor Presentation. Yeah, I mean, think about it this way, right? Ooh. Could it be worth it someday? Sure, but when you own the $6,000 Gucci sweater, it's worth that because it's you own the actual sweater itself. When you own a picture of the sweater, is it worth anything? No, right? I mean, not that I know of. I don't think it's worth shit. Um, it's just a picture of a sweater. The value of having the sweater is that you own it, that you can wear it, you can show it off. The value of having art is you can hang it up, you can show that off as well. The value of owning, this Banksy, maybe if you get like a projector or something, you got a hologram image, or you're like, yeah, this is a Banksy, it's a one of one, I own the rights to it, nobody else owns it, here's the proof for that. That's got different value to it, I'd argue. Owning, I think there's like an NFT for these sports cars that we're seeing. I think these are going to they're extremely overpriced as is. From what I'm seeing, those are the ones that I'm keeping a close eye on myself. Or when the market finally does crash, the crypto NFT market, I don't know if they're going to be synonymous, we'll see. But, or I'm sorry, I don't know if they're going to be synchronized in their crash, but I'd imagine they would. It'll be very interesting to see, though, if they fall the way I anticipate they will, and I think they will. Yeah. Exactly. Or people who are following Gary Vee, Logan Paul, any of those guys who are big on the sports card scene. Why are they big on the sports card scene? They have more influence than anyone. I built a whole app For 3 years, guys, funding, everything, almost $1 million in funding, which is nothing crazy, but almost $1 million in funding we raised. Spent 3 years building an app that was based off of people's influence that they have on their friends, based on the influence that celebrities have on their followers, etc. And these guys know they have influence. They all try to monetize it the best way possible. What's the best way to do that? Well, they had sports cards first, like a year ago. So you got people like Gary Vee who are telling you that this Joe DiMaggio trading card is going to be worth so much money, in the next week or two. And meanwhile, behind the scenes, they've scooped up like 3,000 of those cards. So all their followers, what are they going to do? They're going to go start trying to buy these cards on eBay from anyone they can. Oh, it just so happens that Gary Vee and they're the ones selling them on eBay for a markup of what they paid for it. And these guys are going to get, they're pumping and dumping shit. That's how I see it. There's a lot of fraud out there. There's a lot of very smart people out there that have good intentions sometimes. It's very easy for them to turn into fraudsters. Remember, take a lot of my investing principles and business principles from listening to Warren Buffett and Charles Munger. That's what makes me the only 25-year-old value investor in the world. But they point that out when they talk about BITA. I can talk about that as well we don't look for that, or at least I don't look for that, because those numbers can get fudged pretty easily. But they say something like you're not gonna see them get defrauded by someone who has this lavish lifestyle, who has this beautiful office, who's got beautiful women around them all the time, who's driving exotic sports cars like Lamborghinis, because those are the people who are preying on people to say, I want to be like that guy, I'm going to listen to him. You got to be smart enough not to listen to those people. There's a lot of fraudsters out there, but that kind of screams like Gary Vee, that screams Logan Paul, that screams Grant Cardone, Ty Lopez. All those guys just are screaming fraud to me. Gary Vee might be the most legit of them all, if I had to say. But they know what they're doing. They know how their influence works. I need to find their investor presentation. This company just had a DA today. It's a multi-company merger, I'm almost positive. I'm just trying to find their investor presentation. Find it in the current report. NFT will only work if there's something. Yep. Stuff like virtual real estate, like decentralized, is a bit weird at the moment. Yeah, I don't know what the deal with virtual real estate is. The real virtual real estate, in my opinion, guys, is websites, domains. There's only so many good domains out there. I own a bunch of them for the sake of like the internet really is just an entire different world. And you want to own some great real estate on there. You want to have real estate that's driving traffic. That's what I do for companies. I drive more traffic to their website so they can get more customers, right? And you want to have a great domain that they can land to, or they can show up to. You want your house to look great, so you need a great website. This is a pretty shitty website. When I show up here, this is the crackhead's house I'm showing up at. I want to show up to that house in an estate in a gated community that's got, a tire swing in the front yard, kids throwing the football, everyone's laughing, having a great time on here. I know what the house is all about when I show up there. It's almost the size what the company does. This company's pretty shitty. Looks at their website. Let's see if they've got an investor presentation on here. I'd almost doubt it at this point. They do. Let's see. So I think digital real estate's a real thing. I just don't see it in the form of NFTs currently. Let's see, Bill Gates buying up farmland like crazy. Been reading, he is investing in seeds. Think about it. Food and the ability to produce will be more valuable than intangible objects. Agreed. As our population grows, guys, we need more resources. And the U.S., don't get me wrong, the U.S. has more than enough resources right now for... ARC. They have more than enough resources right now to feed our growing population for quite some time. But that's what usually invokes all wars, is a battle of resources in some form. Um, I think that's a large reason that you're seeing us, all these space companies come about, and the need for trying to make it to like Mars, for example. We need to find another planet that can give us more resources for our people back home. App harvest, maybe the future. What's app harvest? Regeneration or national. Let's see. One empire over seed. Control over the world's seed banks. Interesting. Yeah, Bill Gates is a very smart guy. He's someone that Warren Buffett broke his typical investing philosophy of, Peter Lynch is the same one too, where you don't invest in companies that you can't understand what they do, right? You don't understand what makes them a good company versus their competitors, or how they're going to win, or what makes what means they're doing well, or how they can do better. That's what those guys invest in. That's what I try to invest in as well. I try to at least um, broaden my horizon little by little. I just invested into Renew Power, RMGB. I believe that one's going to be a massive play. That's the most recent Spac I got into. First company I've taken a position on since September, and that was Open Door, and I took a position on Laser Luminar right before then too. So I'm in there around $10 everywhere. So I get really good returns. But I understood it just enough to where I can dive deeper, get a better understanding of it, and that's going to allow me to invest into other kind of sectors as well. But Bill Gates is the one person who Warren has broken his investment philosophy on, in the sense of he didn't understand, but he still invested a little bit. It wasn't a whole lot, in Microsoft, but Bill Gates sat down with him for 9 hours, and Warren knows nothing about computers, doesn't know anything, and he took 9 hours of being just a great teacher to him of what they're doing, and he could tell because he was a great teacher, he was going to be doing great things. That's what he says. There's a lot of smart people out there, but if they can't explain these concepts to a 5-year-old, they don't really understand it themselves. Bill Gates clearly understood it, and because of that, he didn't seem like a fraudster to Warren. He lived a very modest lifestyle as well, and how he dresses. We all know how Bill is. Very, very smart guy. My mom met Bill when she was working at Allstate, and she was a beta tester for Microsoft at the time. But he didn't make a big investment. He bought 100 shares of the company, and that's all he could justify. But he bought the shares strictly because he really loved the person Bill Gates was, the great teacher he was, and he knew that his success was imminent because of that. And so he got a little piece of it. They're still great friends. They make investments together too. Bill Gates, people, while everyone shits on Bill Gates, go try to get behind whatever he's doing, because you can probably get it on a discount now. While everyone's angry at Bill Gates, they won't be angry at him forever. He's still moving. He doesn't care what people think about him. All right, this is MNC Play and Vision are having a merger to go public through Spac through MLAC. So let's start by getting my spreadsheet over to where it came from. This way I'm not just staring at you guys. I can make sure I'm monitoring the comments as well as I start entering some numbers in here. Oh, yikes. If you guys haven't already, please, 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 smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every single time we drop new videos, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks. Alright, in this one. Any of y'all ever watch Custom Grow 420 when he was on YouTube? Or is that just Stoner College Mike talking? Well, what up, YouTube? What's App Harvest? Scott, can you explain App Harvest to me like on 5? What do they do? Before I click on that link, because the link's going to really slow down my computer, and I will after I dive into another Spac. What are they doing? What are these companies doing? OTT Media. Let's stand this a little bit wider for y'all. Yeah, so. Great seeing you, Angela. Thanks for sticking around for so long. Always love seeing you here. Expect me to hit you up on Discord. I'm gonna have some questions about that inflation and how I can incorporate it on my sheet for sure. If anyone wants to access the numbers I'm punching into the spreadsheet as well, and you don't know how to already, there is a video in the description below to tell you how to get there for free. I got it hosted on my website for y'all. I don't understand what these companies do. I heard everyone say bye, Angela. Bye, Angela. Jesus. Got about another hour up in here. What other companies do you guys want me to look at? Spacs I can look at. If anyone just had some recent earnings in the company that you're holding or considering holding, let me know. I can look at the earnings for us. We can crunch some public numbers. Look at what their book value is. Look if we're getting a fair price for them today. I don't know what this company does. What are they, just like Netflix? Let's look at their, let's see if they've got competitors on here. They got it, right? Partnerships, we love that. What is OTT? Bye, Scott. Thanks for stopping in. I'm gonna take a look at App Harvest, and I'll try to message you in the Discord, or we can definitely go over it tomorrow. ECEI. Are they public or are they SPAC? Trouble. Video on demand, I think. Over the top media. Okay. Alright, I think I understand it now. Top media, video on demand. That's what we're looking at. BCEI, okay. Do they have recent earnings or anything in trouble? Just so I know what we're getting into. Okay, let's go look at this transaction summary really quick. I'm going to do a power crunch on this. Maybe we could do a power hour. Possibly undervalued. Okay. You speak in my language. You had my curiosity, but now you have my attention, sir. Alright, let's look at our enterprise value, which we can find right here. 573 million. What's our equity value post-transaction? Slightly higher. It's only going to be at 580 million. Not necessarily a bad thing. And this is going to be the current as of 3/22, 2021. Let's look at our updated stock price. Let's update that. It's going to give us our most concrete market cap. 996 is what we're looking at. Closed at 986, so it's run up 10 cents today since the announcement. Like I said, these are this company and Iron Swords, the last one we went over. Those are two DAs that just got announced today. That's going to say market cap currently of 178, almost 179 million. Let me go ahead and look at what percent ownership we're getting, and then I'll run over the numbers with you guys again at the end, remember. We're getting 25%, and then this is going to be for our sponsors and founders, 6%, so we're getting 31% overall. 25, 6. Let's try to find some money in here. Subscribers are growing. Revenue. Now remember, we don't want to just bet on companies that do EBITDA. Why do we not like EBITDA? I've said numerous times throughout here that I'm going to explain to us why we don't invest in companies that only preach EBITDA, or we don't really value those numbers, and those numbers can be fudged pretty easily. So what is EBITDA? EBITDA stands for earnings before interest, taxes. Interest, taxes, depreciation, and amortization. So interest and taxes is pretty self-explanatory. Interests are payments that they have on their existing liabilities and debt that they have to make in addition to those liabilities or debt, the same way we do when we have credit card bills, right? We have to pay interest on those. If we aren't paying what we owe every month, the interest racks up. So they're taking those payments out of there. They're taking the taxes that they pay on their money. Well, their company, just like the companies run just like any of us run our own lives. We ran our own companies. We have to pay taxes. It doesn't matter what we do before then. The taxes, the bottom line is ultimately what we're looking for. That's how much money we have to play with. Depreciation, that's going to be like a physical asset, like a headquarters would be an example of that. Computer equipment. Those have different IRS structures as to what they can be depreciated over time. So basically, they can be written off their taxes, but I think like a home or something would be written off over like 15 or 30 years. I can't remember what the tax structure is for IRS, but they just divide it evenly amongst those years. So they're saying if we didn't have, this depreciative expense, when we add that back in there, that's this, and then amortization is very similar, but they're intangible assets. So it's like software and whatnot that can be written off their taxes over an even amount of time. The board decides on those, how much they're going to write it off. So it's like once we add all of these numbers back in there, which are expenses, here's how much money we're really making. We're like, nah, the money we're really making is called net income, or a net loss. That's the bottom line. After all of our expenses, what are we left with for how much revenue we bring in? So EBITDA, that's why we don't really value it. That's why, that's how they're really easy to fudge the numbers with, to make their company look way more profitable than it actually is. So let me know if you all understood that. If you have any questions, feel free to ask them. That is what I'm here to help with. Give you guys answers to questions that I now understand that I had before. All right, revenue, we're looking over here. A little increase. All right, revenue, we're looking at actual revenue reported as of 2019 of 67 million. And that is 2019. What does this give us a growth path to 2025? So we're going to do 2021, 2023, and 2025, just for some even spacing and projections. So we're looking at 108 million. We're looking at 205 million. We're looking at 392 million. That's going to go 2021, 2023, and 2025. And that's going to give us a compound annual growth rate of... So the trouble, I will look at that in 1 minute, by the way. I didn't mean to brush over that. Let me finish this company, and I'll do BCEI's last earnings report. So we're growing from where in 2019? 67 million. We're growing to where? 392 million from 2019. So we're going to do 2020, 21, 22, 23, 24, 25, 6 years. It's going to take us to grow. Gives us a compound annual growth rate of 34.24%. Pretty conservative compared to a lot of SPACs you'll see out there. And this is going to be from 2019 to 2025. Like I said, folks, I'm going to go quickly over this as well after I finish chugging these numbers in there. But otherwise, in times past, it's just me looking at this screen with my spreadsheet, and then this screen has all the numbers, so I'm like intently staring at you. And even though I love my face, I wouldn't want to just be looking at some guy staring at me at the camera for 2 hours. So I'm trying this new today. Hopefully y'all like it a little bit better. Then ideally, I'd like to get more monitors where I can throw the spreadsheet on a different one. That way you can get like a kind of like a picture-in-picture action is what I'm going to try to do for it. But that's future thinking. Oh my gosh, they got a lot in here. Let's see if they got our TAM. Where's our TAM? Indonesia's GDP is growing. Nice. I'd like to see what our TAM really is, though. Let's see, market opportunity. Well, give us a TAM. That's crazy. I didn't know that. Let's see. I don't see what their market is. You can't just take a whole country's GDP as your TAM, so I'll have to dig a little bit deeper after this. Let's get these numbers down first, though. These are going to be their competitors. Let's see if they do local comp. local comp is going to be link net. Do they include themselves in here? Yeah, they do. ADN. Asia Vision Network, okay. That's not good. Why did it freeze on me? Alright, we gotta refresh. Alright, local comp. It's LinkNet. Jesus. Oh no, what did I click on? What's loading? No, I don't want Outlook. Okay. Erg. Okay. LinkNet. Now we're looking at US based entertainment and cable platform comps. Roku. I didn't even know Roku had this much market. Pretty impressive. They've done. I first heard about Roku back in like 2014 from a manager at TGI Fridays. For those of y'all who know TC, our same manager, Jack, this guy, nice dude, don't get me wrong, but he would tell you he invented the fucking wheel if you believe him. So he had a Roku though. He led me onto that. He was kind of woke. Cool young dude. Hope he's doing well. But yeah, he's the first person to give me exposure to Roku. Pretty cool thing. I use Roku every day now. Charter, Verizon, AT&T. All right, and then how about our Asia and Europe competitors or comparables? Asia and Europe based communication platform comps. Alright, so I've got those notes in there. Let me bring this over for y'all to see. Save. Okay, let's go. Quick rush over. Oh, let me get this actually. Nope. Alright, let's get these brushed through. Cool. Alright. So looking to do what, like, similar to what Netflix and Roku and those companies do. Here's what we're seeing. This is what the enterprise value is of their deal. They're saying the company is worth $573 million. Do we agree with that? We'll figure out in a second. All right, I'll at least give you my take on it. The year after the deal completes and they get the money that is being contributed to them, they're saying the company's going to actually be worth $580 million. It's not a big increase like you'd see over here or in other deals. Unclear why. Didn't really see anything that stood out to me, but not the worst thing in the world. This is the share price when we started, $9.96, up 10 cents from close on Friday, and that makes sense. It was just announced today. This merger was just announced today, so there's a lot of hype getting bought into it already, or at least a little bit. That gives us a market cap that we see on paper currently of almost $179 million, so much lower than this, but when we do the number crunching, it tells us that the real market cap post-merger is going to look like $577 million based on these figures over here. I'm sorry, based on this figure over here with this percent of ownership. We're getting a big chunk of this pie too. I'm looking, like I said, for 2 to 3 times this number typically, or whichever one's higher. But this one typically, 2 to 3 times is healthy for me. We've got ways to run for sure. If it goes to 2 to 3 times that, these numbers are going to be worth about $30 a pop. 20 to $30 a pop. You'll be happy you got in. Do we agree with it though? They're making $67 million on paper in 2019. That's confirmed. What the points they made about Indonesia is something I was completely unfamiliar with. I did not realize that their economy was growing as fast as it is. I didn't realize that they're the only Southeast Asian country that's got a GDP higher than $1 trillion. That's actually pretty crazy to fathom. A lot of Southeast Asian countries as well, so go do your research on those. But I didn't even realize Indonesia was like this right now. They're projecting to grow from $67 million in 2019 all the way up to $392 million of annual revenue by 2025. Pretty conservative growth rate compared to some companies we'll see. Like you see some ones up here 90%. We see some of them that have multi-100% CAGRs. I just don't believe those ever. I want conservative growth rates, something I can believe in. TAM, not clear. These are their competitors, local competitors. Doesn't look like they have much local competition, and they're combining 2 big powers now in Indonesia for this kind of sector, or this industry. So I expect them to take out their local competition relatively quickly if they haven't already. US based, you're looking at Roku, Disney, Netflix, Comcast, Charter, Verizon, AT&T, the ones that we probably know best. I'm not familiar with these, to be honest, besides for SoftBank. I didn't even know that they were a provider in this industry, though. They did have partners. I kind of brushed over that, but I want to go on to the next company. I don't understand the sector well enough. I don't understand what's going on in Indonesia well enough to jump into something like this right away. But here's the notes on it. They're both going public. It's going to be a merger and then a reverse merger. Goal is to become the preeminent Indonesian OTT. It's over-the-top media player, so that's like Netflix and those companies. Total addressable market's not clear. It's not defined in there. They tried defining it as Indonesia's total country GDP, which is just not the right way to do that. So the only thing worth noting is that their economy is growing rapidly. There are people who will be able to afford their product, their services. And yeah, that's basically everything I saw. So you can get a fair price today. If you agree with it, it might be worthwhile, honestly. I don't know what Netflix and those companies are doing. Not to say that they're going to do what Netflix and them are doing. Who's to say Netflix doesn't slide into Indonesia themselves and just take over the market? That's something you got to look out for also. There's a market there. The big dogs are going to want a piece of it. Or if I want a piece of those companies, I would hope that my guys want a piece of it. So, interesting though. This is Play Communications. So I don't know if it's comms. This is what I defined it as: over-the-top media and then video on demand. So it's like those streaming services. That's how I defined it. Um, I don't think they're like. I don't think it's a telecom kind of company. Let me bring this back down. We wanted to do BCEI, right? BCEI. SEC filings. I don't see anything on their company website. Let's go look at SEC reports. See what their most recent filing was. It's usually pretty easy to see on here. So they had an annual report in February. Let's look at those numbers. Yes, sir. Yes, sir. Trouble. Let's see. Let's see how this company looks right now. Well, don't know where all the content is. So we're gonna look for assets. Where's our balance sheet at? Best companies are typically the ones that don't have big, lengthy explanations to explain why they're doing well, right? You want the companies who just show you the numbers and you just understand. The ones who have the least to say in their pitch typically means they're doing a great job. When they have to have these long-winded explanations of why they're actually doing well, those are the companies that are. It's a red flag for me. It's a red flag for a lot of investors. So what we are, guys, we're not gamblers, right? We are investors. We find good companies for a fair price, and we watch them grow, and we watch our money grow along with them. If we could have gotten in Tesla 5 years ago, which we had the opportunity to do, at a pretty decent discount, I'd say, no one wanted a piece of it. That's when you got to dive into companies, when no one wants a piece of them. That's our opportunity to get in there and we get 10 baggers out of those ones. Put in 5,000, we turn it to 50,000. That's the end of the game. Lever up a portfolio that way. If you find 5 to 10 good companies in a decade, you will be set beyond what you can even imagine. Finding those good companies, having a bunch of pitches thrown your way, and having the discipline not to swing on them because they're not a good pitch. It's not our pitch that we can send over the center field wall, right? We're not swinging for foul balls. We're not swinging to stay alive. We got unlimited pitches. You can throw us strikes all day, and we can miss on them, and we're okay missing on them. When we find one that we understand, we find a great company, we're going to send that puppy 500 feet. Steroid era baseball. All right, let's zoom in over here a little bit. Do 125. Oh no. Okay, there we go. All right, we get this spreadsheet up. Pull it over here. How's the connection today, guys? I got the Ethernet cable going. Is a noticeable improvement. Let's get these numbers crunched first. BCEI, this company, Bonanza Creek Energy. What does Bonanza Creek Energy do? Natural gas liquids. Energy, this is current as of 3/22/2021 in our ledger. Current stock price is $32.50, which is up from the close on Friday of $32.42. Gives us a market cap of $677 million. I think that I mean, I have a lot of fun looking at SPACs. I think the best opportunities exist there. Those are typically the ones I look for my big gains. It's just a matter of knowing what SPACs to go for and which ones not to swing at. There's a lot of them that you shouldn't swing at, by the way, right now. There's so many more numbers in these sheets when we're analyzing their annual reports, or their quarterly reports, or whatever it is. We can make better objective opinions on the company and how they're being run than we can with SPACs. We don't have enough numbers to go off of with them typically, so we just have to find good companies that we know enough about. We can see what the future is going to look like for them and understand it, and we pick it that way. There's typically better earnings to be made, but I like these because there's more numbers. I like the numbers. Alright, in thousands, remember we're always looking for this first. 2020, 2019 is our balance sheet. Assets are going to equal total liabilities plus total shareholder equity. We want high assets, low liabilities, so that we have a lot of shareholder equity and the shares are worth a lot on paper. Total assets. It's going to have 3 zeros at the end. We got down here 1.1 million, 1.2, well, not like 1.1, we'll see, 1.182, 212,000, so billion, 1206318, so we're down $23 million this year. Not a big deal. 2020 was not a usual year. How about our total liabilities down here? We have our liabilities reduced pretty substantially, I'd say. 269 is what we're looking at. Oh, sorry, total liabilities now. We're looking at 137,560,123. And then we're looking at 269,628,123 the previous year. So our liabilities have been reduced by $132 million. So you can see what happens to our shareholder equity. If I had a guess, it's going to go up. Let's get our current ratio first. These are our most liquid assets. Those of you who are new here, these are ranked in terms of how quickly they can be liquidated. Anything that's considered a current asset can be liquidated for cash. That's why you always see cash and cash equivalents lead the way. In a year or less, same with liabilities. These are going to be liabilities or debts that are due in under a year. So we need to have a ratio typically above 1.2 is considered healthy liquidity. Anything above 2.0 is considered great liquidity. And then it gets subjective from there on. You know, you can see some companies have like 15 for the ratio, and those ones are like, some investors look and they say they're just not using their assets appropriately to grow our company to the next level. And grow our share value to the next level as well. They just don't understand how to use them. Very rare you find companies like that, but that's where it gets subjective. I try to look at this objectively. So we're looking for a number that's above 1.2 at the very least, and above 2 to show us that we're not insolvent, because our debt ratio looks very healthy. So total current assets are reduced to 92 million. 122,405, 123. And then our total current liabilities have been reduced appropriately as well to 74 million, 123, giving us a current ratio of 1.24. So we are in that healthy liquidity ratio range. Now let's look at our shareholder equity. Like I said, I believe it's going to be growing, which you always want it to do year over year, quarter after quarter. You want this number, shareholder equity, We'll have to make note of our preferred stock. None. Great. Our total shareholder equity or stockholder equity, it's synonymous. You'll see it just differ from report to report, company to company. We have grown as well. So our assets were reduced, but our liabilities were reduced by way more. So our current period is over $1 billion is what our shares are worth on paper. And our previous period in 2019, our shares were worth under $1 billion, 936 million, 693, giving us an increase of $108 million, which is great to see if you're a shareholder. This is a great find so far, Trouble. I appreciate it. Outstanding shares we'll find below once we see our income statements or our statement of operations. Fantastic. In thousands as well. This is going to be 2020 and 2019. That's all we're going to take from this. We'll see if we have a quarterly. Let me see if they got a quarterly one. That was page 80. Screw it. Let's see our outstanding shares. You're going to see over here on the 2020 weighted outstanding. We don't take into account diluted. Diluted is going to include things like options, warrants, and all that. They're not real shares yet. They're not accounted for on our market cap or on the price we see. So we want the basic 20. We'll add 3 zeros at the end. So it's going to be 20 million outstanding. Looks like our shares might be worth a lot of money. That's actually pretty low. 20 million, 774. This is going to be for our 2020 annual. Now let's get into our revenue. 2020, 2019, that's all we're going to take. Current period, previous period. If we have the quarterly, we'll have more information to work off of. They'll do like 9 months, 6 months, whatever it is. So, all right, 2020, looking at 218 million. This is our top line, what we're bringing into the company. 218 million and 90,000 versus previous year we were looking at 313 million 220,000. So we're going to keep an eye on as well. So we're down almost $100 million in revenue. I'm going to copy those metrics over here. Alright, let's look at our income so we can see our profit margins. This is our bottom line. After we've paid for all this nonsense, after we've paid our taxes, after we've paid our interest, after we've paid for depreciation, amortization, our bottom line, the one that really matters, not EBITDA, bottom line, net income. It's going to give us our earnings as well, right? You're going to see net income or net loss, and that's going to be your earnings, which divided by your total number of outstanding shares, basic, is going to give you your earnings per share. Looks like we had pretty good earnings this year. So our net income looking at 103 million. So our revenue went down, our income went up. So this tells us our profit margin is going in the right direction. We'll see that, and I'll show you that in a second. 103 million, 528,000 versus last year we did 67 million and 67,000. Just copy those numbers over here again. This is an annual report. Doesn't look like they gave us their quarterly numbers, unfortunately, but not the end of the world. We don't need to know their Q4. We can do the math ourselves if we need to. So our income has increased substantially. You can see, let me get this copied into here, and I'm going to bring the spreadsheet over here for us. Oops. Boom. Save it, and we'll bring it back over. All right, let's run us through this all the way. So you can see all the numbers we crunched in here. You can see that our book value per share, this is the number that we want to get, is $50.32, giving us a price to book ratio of 0.65. Anything under 1.0 is considered to be 100% undervalued. This is what the paper is telling us our shares are worth. It's total shareholder equity. So I told you we want to make sure that's going up versus preferred shareholder equity that gets paid, ahead of us, our needs, unfortunately. But you subtract that from there, and then you divide that outcome by the number of outstanding shares. Like I said, we only have 20 million floating around and change, and that's very, very low. I'll show you as we scroll over as well. So I knew this number was probably going to be pretty high. We had a pretty good earnings report. So $50.32 is what our shares are worth. We're seeing that today they're only trading for $32.50. So the public's going to need to catch up to this somehow, some way. You know, we can bank on they very confidently that they will eventually. Typically what we're looking for over here as well is anything under 3.0. It's considered very, very likely to be undervalued company currently by the public. That's our price to book ratio, or PB ratio. Just current stock price divided by the book value per share. So let's continue our jog along over here. You can see our assets, like I said, were reduced by $23 million this year, but our liabilities went down by $132 million, so they were more than okay. And you saw because of that, our one looking for anything. This is a little indicator that shows you like the riskiness of the company you're getting into. This is called the debt to asset ratio, or debt ratio. Take your total liabilities, divide that by the total number of your total assets in the current period. Anything under 0.5 means the company is being primarily funded off of our shareholder equity, like our assets that are already existing. Anything above 0.5 means that it's being funded mostly on debt, like our liabilities, right? So we're taking out debt, we owe people money, we need to pay back eventually for the sake of levering our company up. Same way we would take, maybe borrow on margin for the sake of levering up our stock portfolio, right? So anything above 0.5, closer it is to 1, the riskier of an investment it could be seen as. Anything above 1.0 tells us that our company is currently insolvent, right? Our liabilities outweigh our assets. We owe more money than we have. Good bankruptcy candidates, typically. Current ratio, so we're looking for anything above 1.2. As you can see, we are above 1.2, and we could become more liquid if we needed to. We just don't need to. We're doing great things at this company. Stockholder equity, I told you it would increase, and it increased by $108 million because our assets went down, but our liabilities went down way further. So our shareholder equity at the end of 2019 was worth 936, almost 937 million. In the end of 2020, it was worth almost 1.05 billion. So good to see as a shareholder. We don't own anything for preferred equity, which is great. We only have 28.7 million outstanding. Revenue for our current period is down almost $100 million from the previous year. It's all right. 2020 was anything but a typical year for any company. Some companies, flourished in it. Some did not. These numbers are the same. We don't have quarterlies to worry about right now. And then our net income, we're looking at 103 million versus only 67 million the previous year, right? That's what I'm talking about. Is our revenue went down, but our income, our profit margin probably went up. And you can tell very obviously here that it did. You can see how much it did over here. Like I said, these numbers can all be accessed on my website for free. I update them every single night. So if you don't know how to get there already, there is a link to a video I made for you in the description. It's like a 5-minute long video, but you can get access to that for free. Don't know how long it's going to stay free. If you're in now, you're going to never have to pay me a single dime. We're getting more and more users every day, which is what I was worried about. As that happens and I have increased website activity, I'm going to have to upgrade my servers. At that point, I'm going to put a paywall up for any future users, just because I want to provide y'all free, as much free value as possible. Is what I'm saying. Get in now, you'll never have to pay for it. But eventually I'll put the paywall up. That's just so I can pay for my server costs. That's all I'm gonna, base that off of. But for now, it's free. Link in the description below. If you haven't already, by the way, before we finish this one, smash that like button, please, please, please. Smash that subscribe button and ring the little bell next to it so you get notified every single time we drop a new video, every time we go live and we're making money up in here, which is every single day the stock market's open, folks. All right. You can see our profit margin. Even though our revenue went down, our profit margin increased to almost 50%, 47.47%. Don't know how the numbers worked out like that. Pretty cool. Versus our previous profit margin, we're only looking at 21%. So we're making more money, even though we're bringing in less than the top. When it comes down to it, we paid for everything we need to. What we're left with is worth more than it was when we were bringing in more money at the top. Simple as that. Or we bring in more money than we did the previous year in revenue, and our profit margin continues to rise. We're bringing even more money in for our earnings. Our shareholders are very, very happy. Let me just take some notes on this. Let me know if y'all have any questions or if this all made sense. I don't. It's a lot of information I'm throwing your way. Obviously, I've taken 5 years of learning this stuff by myself. Well, balance sheets and income statements have taken a few months learning about myself, but it's because I do it every day. I have practice time. So I don't expect all this to make sense to you right away. I expect y'all to have questions. If you do, ask them. I will address them. Don't be ashamed to ask questions. I think the dumbest people in the world are the ones who are afraid to ask questions, who act like they're smart. There's always room to grow. I have questions all the time too, right? You saw me asking Angela on here. I have no shame in asking questions because when I get an answer for it and I have an understanding for it, I'm not going to have to ask it again. And I can continue building a strong foundation of knowledge that I can build up from. The directions you can grow from once you have a strong foundation are great. Once you learn how to play hot cross buns on the guitar, learn that well. You might learn Marietta Little Lamb. Maybe you move on to some Smoke on the Water, and then eventually, the range of songs you can play because you understand the foundations of guitar. The sky's the limit. That's the same concept with any kind of knowledge. All right, notes. Assets. Down this here. But liabilities. Assets went down, liabilities went up. Liabilities went down by way more. Thus, shareholder equity went up by over $100 million. What else do we like? Revenue. Exactly. Then I can play some Stairway to Heaven. Revenue was down by over $100 million in 2020 compared to 2019. But net income was up. How much was our net income up by? Let's go find that real quick. Net income was up by 36 million. Profit 47.47% versus 21% double check that. 21.41% 2019. Value per share is about $15, and current share price is about $32. Giving us a PB ratio 0. Undervalued. All right, there we go. We'll have that on the website later today. All right, let's do one more company. Y'all want to do a public one? Y'all want to do another Spac? Spac, I'll stick around for one more Spac. Spent a lot of time talking today. It was a long weekend. What do y'all want to do? I got some options on here, but if y'all have one in particular you want me to do, if you want me to do a public one, if you want me to check out a Spac, we can check out a Spac and do one more before I part for the day. Let's see what Reddit's talking about. LORL or 7 Oaks. Okay. Let's take a look at that for you, Savvy. Or 7 Oaks. Seven Oaks, so they have a target. Has to be OKU. Let's see if SVOK is the same one. It said boxed is theirs. Online retailer boxed. Okay. So that's a pretty low PE ratio. Let's take a quick look. Really? Okay. You have my interest, but now you have my attention, sir. This is not them. This is a different company, right? Yeah. Oh, could have gotten their investor presentation right down there. Let's see if they got it in here. What the hell happened here? What is going on in here? It's a beautiful day to have a day, folks. Beautiful, beautiful day to have a day. How lucky are we to wake up this morning? How many people weren't fortunate like we were to wake up this morning? It'd be selfish of us not to have a great day. Fox has done some philanthropic stuff. Maybe there will be more ESG presentation. I don't see any presentations on here. Let's see, boxed. Let's see if we can find anything on their website. If I can't find anything on the website, I'm going to move on. I'm going to do LORL instead today. Savvy? Oh, yikes. Got a lot of content needing to be loaded. My computer does not like their website right now. It's a bad sign. No, it's not a bad sign. My computer doesn't like any of those big websites like Amazon. My computer can't stand. Facebook, my computer can't stand. Anything that has a bunch of content that needs to be loaded nonstop, my computer can't stand it. We're going to skip box for today. Savvy, if you want to bring that up next time, tomorrow. Oh, okay, no worries, Savvy. Oh, don't even apologize. Don't sweat it, brother. I'm glad you brought it to our attention. Let's go look at Laurel Space and Communications. SEC filings. We do have a 10K that was filed very recently. Let's go look at this one. Let's bring our spreadsheet back over here. Alright, this company is LORL. Company is named, oh, yep, there we go, Laurel Space and Communications. Let's go see what they do real quick. Satellite com. Alright, so satellite communications. This is our second. We got another one in here. Satellite communication systems. Who else is that? That's Global Star. I think you brought that one up to us, didn't you, Savvy? It's going to be current as of 3/22/2021. Let's get the most recent stock price. So we get the most updated market cap with it. 42.11, I believe, is what we're getting. It closed on Friday at $40.85, giving us a market cap today, though. We don't have to take Friday into consideration. $42.11 gives us a market cap of $902,300,000. Alright, I like where this is trending towards. Let's get back to our annual report. We got unresolved, yada yada yada. Financial statements. I believe this is what we want. go. Balance sheets. Total assets at the end of 2020. It's going to be in thousands. So we got 254 million, 169. Previous year, went way down. 2019, we're looking at 390 million, 810,000. So we're down about 136 million on the year, unfortunately. So all right, let's see what we did to adjust for that. So our liabilities actually increased. Not great, not great. 44 million is what we're looking at there. Got a healthy ratio for debt though, I believe. We'll see in a second. 40 million. So our liabilities increased by another 5 million pretty much. Oops. Yep. Liabilities are up by $4 million, but our debt to asset ratio, remember, anything above 0.5, closer it is to 1, riskier it is. We're funding mostly on debt. Fortunately for us, even though our assets were reduced, and we'll see why in a second, I'm sure our revenue was way down this year. 2020 though, so I don't know enough about the company to tell you anything besides that. We'll see in a second, but our debt to asset ratio is only 0.18. So we're financing mostly off of shareholder equity. So our shareholder equity, I'm sure, is going to take a hit. We'll see that in a second as well. We'll confirm. Let's look at what our liquidity looks like, though. Looking at total current assets, $34 million. And our total current liabilities are only $4 million. So very, very healthy liquidity. Yeah, that ratio puts us at 7. You only have to get above 1.2. That gives us a 7.04. So we are more than liquid. Let's go look at what our total shareholder equity is. It's 209 million. Let's see that down here. 209,533,000. Previous year end, 2019, we're looking at 350,027,000. So it was reduced by 140.5 million. Preferred shareholder equity, nothing. See, we'll make note of it up here. We don't owe anything, so we're good there. So our statement of operations. This is expenses. Did they not make any revenue? Cash flow statement, no, statement of operations is what we needed, but did we not bring in a single dollar of revenue last year? That is certainly room for concern. There we go. Revenue, income. So we want top line, bottom line. What do we leave with? So what happened to our profit margins? I'm sure our revenue had to be down, if I had to guess. So let me scroll up. This is slide 112. Go back up here. There we go. Okay. We got our total shares. Basic shares. We got 30 million. 30,933,000. Remember, diluted is going to account for options, warrants, shares that don't exist in our share pool yet. So we don't have to account for those. They're not being factored in the price we see. All right, let me go back to slide 112, which has our statement of operations on there. Yep. All right, revenues, top line. This is for their 2020 annual as well. $613,866,000. Previous year we did 687 million. So our revenue was down by 74, almost $75 million. All right, 2020 was not a typical year for anyone. Keep that in consideration. Let's go look at what our net income was. 637,000. Net income previous year was 156, so our profit margin does increase. We'll see exactly how much in a second. Because our revenue was down by 74 million, but our net income was up by almost $22.5 million, making our profit margin go from 22.7% to 29.1%. So becoming more profitable as a company. That's great to see. Not going to have 2020 happen every single year. All right. Let's bring this over here. Now that we've got everything in there, let me put this in there as well. Link for y'all to have in the future. All right. Now let's bring this back over here. Put notes in there in a second. Let's reduce these numbers a little bit so you can see some more. All right. Let's go back, do a little quick overview, and then this is going to be the last thing we do before I depart for the day. So, satellite communication systems, they're trading currently at $42.11. They're up today from $40.85 where they closed on Friday. Current market cap $902 million. We'll get into what makes these just so you have a better understanding of them in a second. Total assets, like I said, they were reduced by $136 million. You can see that right here from 2019 year's end. Liabilities increased by $4 million. You can see right there, but our debt to asset ratio is below 0.5, making it a less risky investment. They're financing mostly off of shareholder equity. Our liquidity is more than healthy. We've got a 7 right there. We're looking for anything 1.2 or higher. Is considered healthy for liquidity's sake. Current stockholder equity, or total stockholder equity, has been reduced by 140 million. That's what happens when your liabilities are reduced and when your assets are reduced substantially and your liabilities actually increase. Your total shareholder equity is going to take a hit. So something to keep an eye on. It went the wrong way for 1 year. Preferred stockholder equity, nothing to pay there. Total number of outstanding shares is 30.9 million, almost 31 million. This is their 2020 annual. We're looking at 2020's year. Their annual revenue was 613 million versus 687, almost 688 million the year before. So down by about $74 million. And then our net income, like I said, it oddly increased. Went up by 22 million, almost 22.5 million to 178. So we're becoming more profitable as a company. Our profit margin has gone up from 22.71% to 29.1%. Great to see as a shareholder. As long as we're profitable, we should be stacking assets on that balance sheet. I'm not sure why our assets went the wrong way this year. Maybe we paid existing debts off to reduce our liabilities, but that wouldn't make sense because our liabilities went up. So I got to see. I'll look at their statement of their cash flow statement and see if I can get a better understanding. But I don't understand cash flow statements well enough to do that on air. I don't want to lead y'all in the wrong direction ever. So let's make some notes of this real quick. So that's what assets decreased. I think it was 100 and what was it? 136 million. Liabilities increased by about 4 million. Thus, shareholder equity decreased by about $140 million. 20. What else do we see? Revenue decreased slightly in 2020, but profit margin increased There's 22%, 29.1%. Let's see, exact number, 22.71 to 29.1. What else do we see? Oh, we didn't go over the book value per share. Let's go over that real quick. So when all these numbers are considered, we take into consideration our outstanding shares, we take into consideration our total stockholder equity, we subtract any preferred stockholder equity from that. That's going to give us our book value per share of $6.77. So we see today that that's trading at 42.11. When we divide that by 677, it gives us a price to book ratio, a PB ratio of 6.22. We're looking for anything under 1.0 is considered typically to be, well, under 1.0 is 100% being undervalued currently, so you're buying for a discount. Anything under 3.0 is considered very likely to be undervalued currently. There's no growth price to do it yet. So 6.22, these are typically companies that we would consider to be, or I'd consider to be, either fully priced, or this isn't what I'd say overpriced, but definitely fully priced. Not saying it's a bad company, could be one that improves in the future, could be a good time to get in, but I'm likely passing here. It's not something I'm going to allocate a portion of my portfolio to. I'm going to make note of this really quick. Book value per share is about $6, and share price is about $42. Giving us a PB ratio of 6.22. Above 3.0. Suggesting this fully priced or overvalued. Alright, that is that, my friends. I'm going to go ahead and save this. I'll get this uploaded by the end of the night. If you need help, like I said, accessing all this information is for free on my website. The information is in the description below. It's like a 5-minute long video, so if you haven't already, take time to do that. If you haven't already as well, please smash that like button, smash that subscribe button, and ring the little bell next to it so you get notified every time we drop a new video, every time we go live. We're making money up in here, which is every single day the stock market's open, folks. Alrighty, with that being said, I hope everyone's having a great Monday so far. I hope if your portfolio started red or it wasn't green yet, we've sent it green with some good feng shui, some good vibes, some good energy by the end of today. Hopefully by the end of my stream, 2 hours spent with me. So I appreciate y'all being here. Appreciate y'all's love and support. Love y'all as well. Mwah, mwah, mwah. Yeah, good luck to y'all the rest of the day. Have a great rest of your Monday. Savvy, I know you're overseas, but over the pond. So have a great rest of your evening, my friend. Send me any, information. I always love waking up to see what you've been researching while I've been sleeping. So send me any other things you're looking at, and let me know when that presentation does drop. Oh, Husky Jay, just in time for me to leave. Love you, Jay. Thank you for showing up. If you haven't already, please smash that like button for me. But yes, that is all the time I have for y'all today. I will see y'all tomorrow, trying to get on here as close to 10:30 a.m. as possible. If y'all have any questions, contact me on social, and I need the links below. If you need me, make sure you tag me in Discord so I get notified. Best way to, if you need anything is to private message me. I'll always respond to those, typically 1-day turnaround on those. So until next time, my friends, y'all have a great rest of your day. See you as well, Hanks. You're welcome, my friend. I will see you tomorrow as close to 10:30 a.m. Central Time as possible, and good luck on your